Good morning, everybody. Welcome to Morning Markets on Friday, the 17th of April. A couple of things from our morning meeting that I'd like to share with you today. The first of which is sort of the themes that have been dominating the market over the past couple of days. And I think if we split those down into four, the first is clearly around COVID-19 and how infection rates and mortality rates are trending across various different geographies. The second is economic data, which is clearly backward looking but capturing the impact of COVID-19 lockdowns on economies globally. Thirdly, the corporate earnings data that we're starting to see from US companies and some European companies in particular, which is indicating the impact on their businesses. And then finally, grappling with the lockdowns and how lockdowns are being gradually released in a number of countries. If we think about overnight, probably the factor that has driven equity markets stronger and allowed bond markets to weaken slightly has been the detail that we've had from the US, where the US will be giving individual state governors control of the relaxation of the lockdown based on very strict criteria. But that is a clear roadmap that the US has set out for regaining the lost economic output that we've seen and bringing the economy back to what could be a more normal operating status. So we'll see how that evolves over the coming weeks. I think the other things that we've been focusing on today, the unemployment numbers from the US yesterday, where we saw 5.2 million new claimants coming to claim unemployment benefit. That takes us to 20 million individuals from where we had been just before the lockdown began. So a significant number, but I think also crucially, if we look at the trend week on week, the trend has fallen by 20% from the number last week. That could be an indication that the federal programs are now starting to take an impact and supporting workers in the US market. So that's something again to continue to look at. The other interesting development over the past couple of days has been increased commentary from the ECB in terms of the actions that they could take to further support the Eurozone economy, with Christine Lagarde being very specific yesterday that they would take whatever action is necessary. So I think they're setting themselves up to do something more in the coming weeks as well. And then just finally today, with Chinese economic activity for the first quarter of 20. Clearly this was going to be disappointing data given China was first into the COVID-19 problems, and that's clearly evident in the data where we see GDP declining for 6.8% in the first quarter year on year. That's the first time China has experienced negative GDP growth on a quarterly basis since 1992 when they started to release this data. I think we can focus too much on the headlines. I think if we get in below that and look at what actually is happening on a month-on-month basis, that gives us a slightly better indication of what's happening in China. And I think it's important to note these factors, because what do we see there? Well, we see quite an improvement in industrial production month-on-month for March, over 30%. And also we see fixed asset investment increasing 6% month-on-month. So those are both positive factors. And that gives us an indication to think about what might happen in other markets as we reopen. So we've seen a very swift downturn in activity, but we also might see quite a significant pickup in activity as we come out the other side. That's it for today. I hope you found that useful, and I'll speak to you again next week. Thank you.